The Saudi real estate market is not slowing down, but a lot of investors are already making the wrong decisions. Prices are stabilizing, demand is shifting, and for the first time in years, not every project is working. So the real question is not whether the market is strong, it's whether you actually understand what's changing. Watch till the end and I'll explain who benefits from this shift and what starts to matter much more in 2026. Let's start with performance. The Saudi real estate market is not declining, but a lot of investors are already on the wrong side of it. Recent data shows overall prices declined by around 1.6% year-on-year in first quarter of 2026. That's the first clear signal that pricing power is weakening, especially in residential, where apartments have softened and villas have seen the sharpest correction. But this is not a uniform slowdown. Commercial real estate is still growing, up around 3.4%, and some residential segments continue to show short-term gains. This divergence matters because it tells you the market is no longer moving together. It's separating, and this shift is not random, it's being engineered. Policies like the white land tax are pushing land prices down and improving supply dynamics, while regulatory changes are making it easier for international investors to enter the market. So demand is evolving at the same time supply is increasing. In short, this is not a market in decline. It's a market where pricing mistakes are starting to get exposed. Now let's talk about the structural shift in the market. A key message to keep in mind is that across sectors, the real estate market is not slowing, it's resetting. First of all, the shift from speculation to real performance. So buyers, tenants, and investors are no longer betting on price growth. They're focusing on usability and income. Residential buyers, for example, are taking longer, often around 60 days to decide, prioritizing quality of life and integrated communities. In office and retail, demand is driven by efficiency, footfall, and ecosystem, not just location. Hospitality, on the other hand, is now judged on yield, not branding alone. The second aspect is the shift from uniform growth to segmentation. So not all assets are performing equally anymore. In Riyadh, for example, prime areas like Al-Malka, Hattin, and near King Abdullah Financial District continue to attract demand. But secondary locations and undifferentiated assets are seeing longer vacancies and pricing pressure. That tells you that capital is becoming selective. Third, the shift from speed to discipline. So quick sellouts are no longer the norm. Projects now require phased releases, careful pricing, and real demand creation. Across all sectors, execution discipline is replacing momentum. Fourth is the shift from standalone assets to ecosystems. It's been noticeable that mixed-use and integrated developments are outperforming. Single-use assets, whether residential, retail, or office, are losing relevance without surrounding demand drivers. Fifth is the shift from development to operations. So value is no longer created at delivery, it is sustained through operation. The winners are those who think beyond building and focus on long-term performance. So bottom line, the market is more mature, more selective, and far less forgiving. Now to add another layer on regional dynamics. The key question today is wait or enter. Geopolitics doesn't stop real estate, but it changes behavior. As we know, real estate is a long-term business, so it is not surprising that investors become cautious, capital becomes selective, and decisions take longer. Saudi Arabia remains relatively insulated, but not immune. So the impact is not contraction, it's delayed commitment and stricter underwriting. So here is the paradox of 2026. At the exact moment capital becomes cautious, development is accelerating at scale. That's not a contradiction. It's policy-driven momentum overriding market hesitation. Moving on to outlook and policy signals, we cannot talk about what the market will look like without anchoring the main force behind this acceleration. That is the public investment fund. So PIF continues to deploy capital at scale, driving mega projects, infrastructure, and urban expansion. Its 2026-2030 strategy reinforces long-term commitment to real estate and economic diversification. Today, over $1 trillion in projects are planned or underway, with Riyadh alone expected to deliver tens of thousands of residential units and other iconic mixed-use developments. So what does that mean? On the short term, there might be pressure from supply, costs, and sentiment, but on the long term, there is policy-backed growth with structural demand, which raises real question. How should the primary four stakeholders respond? Developers should control supply, phase intelligently, and manage cost exposure, while investors should prioritize quality, not hype, income, not speculation. Banks should stress test assumptions and monitor concentration risk. Finally, end users should focus on affordability and long-term value. Looking ahead, expectations remain broadly constructive. Moderate, steady growth is still expected at the national level, with Riyadh and key urban centers likely to outperform others. But the key story is the growing divergence within the market between stronger and weaker assets. Most forecasts still point to around 5 to 8% national growth, with higher performance in prime locations. So this doesn't necessarily mean the market is weakening. It's becoming much more selective, and that selectivity will matter more going forward. To give you my final thoughts, and this is the most important takeaway, Saudi real estate market is moving into a stage where success depends less on simply entering the market at the right moment and more on making the right decisions once you're in it. That means having a clear strategy, choosing the right segment, understanding real demand, and executing well. If you are a developer, investor, or buyer, the market will not forgive poor decisions anymore. The question is no longer should you enter, it's whether you actually know what you're doing when you do so. In the next videos, I'll go deeper into where the real opportunities are emerging, which segments are actually outperforming, and how deals are being structured in today's market. Because understanding the market at surface level is no longer enough. Execution is what matters now. If you want to follow this breakdown in real time, subscribe and stay connected. And if you're working on a specific project or investment decision, you can reach out directly at landcapital.sa@gmail.com for a focused discussion. I'll see you in the next one.